Hello, future CAs. Today we're going to see two important amendments in advanced accounting paper, guys. Yes, amendments in advanced accounting, and this amendment is there in our RTP Jan 26 exams. If I am not making this video, maybe you would have also skipped this amendment by not even looking at this, because our general mindset is we look at amendments for law or tax in RTPs, but for subjects like costing or accounts, we hardly look at the initial text and we straight away go to the problems. These are the two amendments that we have in RTP, guys, and I'm going to explain both of these in detail to you. The first one, brand new amendment with respect to AS22, which I'll be explaining now. And the second one is a change of limit for applicability of accounting standards. This change of limits for applicability of accounting standard is also there in RTP September 25 exams. That means this was there even for the previous attempt, but this has not yet been tested. So I will mark both these amendments as important because these are the only amendments, and maybe in MCQ or theory, if ICA really wants to test very rare areas, these could be the ones. To explain the amendment with respect to AS22, I need to introduce a few new terms to you in a very layman language. Let me put it to you. They use some words called Pillar 2 income tax. What is this Pillar 2 income tax? Let me give you an example. If I take an entity like McDonald's, now McDonald's burgers is available across the world in some 50 or 100 plus countries, correct? So since they are operating in many countries, these companies, big MNCs, what they do, they try for some tax planning where they will shift the profit to countries where income tax is less, and in the countries like India where income tax is high, or developed countries like US where income tax is high, they will try to reduce the profit and shift this profit to tax saving countries. To counter this only, our international organizations, the OECD and G20, they have come with a lot of reforms in international tax called Pillar 2 income tax, which is a huge subject on its own, which we will all learn in CA final. How is this relevant for us now, sir? Let me explain. What they are saying, I'm given the summary. What is relevant for exam? I've given you 1, 2, 3. 3 points if you remember for exam, more than enough. And some disclosures that are needed. I have summarized it over here. But the same thing is there in our RTP also. Let me explain it once over here and then summarize in our notes. What they are saying, for income on taxes arising from the tax law to implement the Pillar 2 model established by the OECD, then those companies have to pay taxes as per this Pillar 2 income tax. But our good news, what they are saying, as an exception to the requirements in this standard, what is AS22 saying? You have to create DTA and DTL. Already we have current tax, deferred tax, and in AS22 we also have computation how to find deferred tax asset or liability if there is math. And those math sums, what it's saying, ignore this and compute DTA, DTL normally. Here also what they are saying, an enterprise should neither recognize nor disclose information regarding DTA or DTL relating to Pillar 2 income taxes. That is my first summary that I have given, guys. Do not disclose DTA or DTL related to Pillar 2 income tax. Like how when a MAT credit sum comes, you ignore the MAT and do the DTA, DTL. If a Pillar 2 income tax comes, ignore it, claim the exemption and compute DTA, DTL without that. But along with that, they have also given some more presentation and key disclosure points. What is that? They have to disclose that the entity has applied the exception. Very simple. That's what I've given over here in the second point. If I am following Pillar 2, then company has to disclose it has applied the above exception. Oh, I am not following this, or I am following this. Disclose that. And lastly, they have given one important huge page over here with lot of explanation over here. I have summarized this in simple for you. If an entity is going to follow this pillar 2, then it will completely change its income tax. That presentation, the amount will vary. So they are saying disclose the qualitative and quantitative effects of pillar 2 income tax, and they are giving some examples of what are these qualitative and quantitative things companies can disclose. How entities affected due to pillar 2 tax. What was it before? What is it now? What is the impact on future profits? Qualitative, you give disclosure. Quantitative, what percentage of profit is subject to this new pillar 2 tax? For example, if my company's net profit is 100 crores, in which 20 crores is coming from international sources. So the 20 crores will go through this pillar 2, rest as per the domestic laws. How effective tax rate has changed due to this? Yes, in India, tax rate, corporate tax rate is 30% plus whatever all those things come. But this pillar 2 tax rate, internationally it is 15%. So now when I find the effective tax rate the company has paid globally, the tax rate will change. This is a quantitative disclosure. So that's what they are explaining over here. These are the things that you should learn for your exams, which I have summarized. To quickly summarize once more, guys, very simple. AS22 is not affected because of pillar 2. Company will follow exception. Do not disclose DTA and DTL for pillar 2. Then disclose if it has applied above exception. If it is not following exception and following also, you apply it, and disclose the qualitative and quantitative items from it. What are that? That is given over here, guys. This is the first amendment that we have in our Jan 25 RTP. Apart from this, there is also one more amendment, guys. One more amendment in our RTP. It's about, goes for about 4 to 5 pages. Looks scary. This is the one which talks about revised criteria for classification of non-company entities for applicability of accounting standards. So applicability of accounting standards. But the good news is this came in RTP September 25. Sir, that time also I skipped it, sir. No problem. Same thing is coming in RTP Jan 26. Applicable. Both are same. For RTP Jan September 25, I would have explained this amendment back then. So the same thing I will be attaching over here. With that, in this one video, both the amendments for Jan 26 is covered. Go enjoy the second amendment, guys. So what this amendment is basically saying, guys, that applicability of accounting standards, they used to give some limits that has undergone some changes, not for companies, but if you are not a company, the word they have used this non-company. Sir, non-company means what? Non-company means partnership firm, sole proprietor. Sir, I am having a partnership firm. If my limits are crossing all these, I have to follow accounting standards. Sir, all these days I thought accounting standards are only for companies. No. Accounting standards are even for non-companies like partnership, sole proprietor, which has been there from day one. So in this amendment, they are classifying this non-companies into two types. MSME, large entities. I will again repeat. MSME, large entities. MSME is nothing but the same meaning that we know. Micro, small and medium enterprises. Now for large entities, earlier we had some name called level 1, level 2, level 3, level 4. Large entities is only level 1 entity. Are you following, guys? So large only is level 1 entity, and if you are a large entity, you have to follow all accounting standards. I'm repeating, you have to follow all accounting standards. Level 2, level 3, level 4 is also categorized as MSME, micro, small and medium. The first exception, if you are into MSME, these 4 accounting standards not applicable for you. You don't have to follow them. If you want, you can follow. It's optional. What is it? AS3, AS17, 20 and 24. These 4 accounting standards no need to follow. Preliminary overview is done, guys. Sir, now exam, what should I remember? What they are saying, anything which is not an MSME becomes a large entity. Reverse definition. Anything which is not in MSME becomes a large entity. If you are a large entity, you are level 1, all accounting standards 1 to 28, into 1 to 29, you have to follow everything, guys. That means I should learn what is an MSME. So if I can teach you what is an MSME, if it is not an MSME, you know it becomes a large entity. Is that clear, guys? So now I need to know what is this MSME. What is this MSME, guys? Very simple. They have given 5 points. How many points, guys? 5 points. If you satisfy any of these points, then you will fall under an MSME. You will fall under an MSME. What are these 2 points? The first 2 points relates to limits. In Companies Act and law, we have so many limits. Here, just 2 limits. Then the remaining 3 points are theoretical points, important but not limits. Not limits. First, let me finish the limits points, which is important if they're going to ask in exam. Because it's an amendment, it's going to be these 2 points. As usual, they have the turnover or borrowing limit. Let me finish the turnover. The turnover should be less than or equal to 250 crores. The word they are using is not exceeding 250 crores. I'm again repeating, the words that they use in RTP or the amendment is not exceeding 250 crores. Therefore, less than or equal to 250 crores. Now, the 2 important catch points over here is not all turnovers, guys, only turnover excluding other income. That means the core operating revenue. For example, if I am L&T into construction of metro rail, for me the core revenue is construction of metro, construction of buildings, interest income, rental income, whatever you keep in other income, you should not consider. If your core income is less than or equal to 250 crores in previous, not financial year. One more important thing to note here, guys. They are using previous accounting year. So the accounting year for entity can be April to March, Jan to December, whatever accounting year they are following, the turnover other income should be less than or equal to 250 crores. If it is less than this limit, then I can call it an MSME. Sir, if it's more than 250, sir, it became 251 crores. Then what is it? It becomes a large entity. Next, similarly, borrowings. Borrowing should be less than or equal to 50 crores. Here the catch is not as on 31st March or as on 31st December, end of the year, not for the whole year. Any time in the previous, again, accounting year. In law also, we would have seen this many times. Whenever borrowing comes, it's not as on the last day of the accounting year or financial year. Here it is any time during the year. It should not cross 50 crores. It should be less than or equal to 50 crores in the previous accounting year. These are the 2 limits. The next other 3 points are very simple. Such MSME should not be a bank, financial institution or insurance company. If it is a bank or financial institution or insurance company, then it becomes a large entity. Next, it should not be a holding or subsidiary of such MSME. That means, I'll explain this, guys. Look at this. Okay, I have an MSME. Let me call this as A Limited, which is, okay. It should not be subsidiary of another MSME. So it should not be a holding or subsidiary of another MSME, guys. Last one, sir, how can I have holding subsidiary in partnership firm? Very much possible, guys, if control is there, because holding subsidiary, they define using control. Okay. Lastly, if your equity or debt instrument, it should not be listed for you to call yourself an MSME, or it should not be in the process of listing. I'm again repeating, it should not be listed or it should not be in the process of listing. So either I should have not made an application which is pending, or it is not listed also, equity or debt, not both, anyone. And the main thing is, it should not be listed in India or even outside India. Sir, in India it's unlisted company, sir. I am listing it outside India and US. For example, in India, a company called Freshworks is not listed in India, but it's listed in the US stock exchange. So they are saying it should not be listed or in the process of listing in India or outside India. It's equity or debt instrument. Of course, it's not a company, guys. So if these 5 points are met, then it's an MSME. Any one point is broken, then it becomes a large entity which follows all accounting standards. Then if I come down over here, in RTP, lot of disclosure points are given, but I am only taking exam oriented. I am repeating, exam oriented. What can come in the exam from all these paragraphs? This one last paragraph is important, may come in exam. If the examiner is very angry, this time he wants to put you in hell, then he can ask. For an MSME, I already told you, these four accounting standards, 3, 17, 20 and 24 is not applicable. Same way, AS18 is also not applicable for an MSME if the same limits are repeating. The turnover excluding other income is less than or equal to 50 crores. Here it is how much? 250 crores. Sublimits for AS18. For AS18 they are giving a sublimit, sir. Borrowing less than or equal to 10 crores. Above borrowing is how much? 50. Look at this. 250, 50. 5 times. Borrowings into 5. You get turnover. Here also, borrowings into 5 turnover. They just divided this limit by 5. Are you getting it, guys? They just divided this limit by 5. So 250 by 5, turnover becomes 50 and borrowings 50 by 5. It becomes less than or equal to 10 crores. And the last point repeats itself. Not a holding or subsidiary of another MSME. So these are the key amendments which are relevant for exam if you are writing in September 25 or later. Generally, ICAI likes amendments, guys. That's about it. All the very best, guys.